Right, let's introduce then Shailesh Chaturvedi. He's the Managing Director and CEO Arvind Fashions, joining in to talk about their expansion plans as well as footfalls and much more. Good to have you on board. Let's begin by talking about what the demand scenario has been. What kind of momentum are you seeing in terms of your pre-COVID sales? Has that been crossed in terms of your footfalls?
Uh, Good morning. Since March this year, we have seen very strong demand scenario online and offline. You look at our this quarter results over pre-COVID, our sales have grown 40% and it's one of the largest quarter for us. So we've seen very strong demand pull from consumers. And one good thing was that for the first time after 2 years, we saw a full season. So we could launch the new season February, spring, summer, and we ended in July with sale. In August now we're launching the new season. So we have seen the full cycle for the first time in the last 2 years, and because of that we've been able to execute quite well, and our sales are up 40%, our EBITDA is up 52% over pre-COVID time. So we are very pleased with the external environment and the way we have executed our promise to the consumers.
Okay,
Right.
fair.
With the cotton prices, Shailesh, where is it that you see your margins going forward because of the volatility that one has seen in commodities?
So there was a very coupled with a sharp demand increase, there was also sharp cost increase. What we have seen in the industry is that industry had passed on most of this cost to the consumer, and in the strong demand, we've been able to pass it around and absorb it and still maintain our discounting. So right now things are okay. Also the commodity follows cycle, and we have seen probably the first slowdown in the increase of cotton prices, and we expect that by quarter 4 cotton prices should normalize. Let's see, we'll wait and watch, but I think the worst on cotton price increase may be behind us now.
You mentioned focusing on inventory turns as well. What are the ideal inventory days going forward that you'd like to maintain?
See, we have a stated objective of taking our stock turns to more than 4 times in a year. We are being at that level. We've reached now 4, and we want to now move forward. So to answer the question, somewhere between 4 to 4.5 tons in a year is the perfect stock turn for us.
So what kind of growth are you seeing in emerging brands, specifically, with something like Sephora? It has been a bit loss-making. So are you seeing a turnaround?
I think Sephora is doing really well. Sephora is largely a offline prestige retailer, and it has very strong consumer equity through the global experience. And then India, we've been running it for many years. We saw very good like-for-like store growth in Sephora, among the highest of our brands. So Sephora equity with consumers in principally in the offline world remains, and it has a prestige bias, and for that consumer, Sephora remains a very strong equity brand.
Other emerging brands, how are they performing?
Very pleased with the performance of Sephora. The like-to-like growths are among the best for us.
Okay. What about your CapEx plans? How many stores are you looking to open?
The business is doing well, and we are in dialogue for opening, next round of stores. Sephora requires a very high quality store, so it takes a lot of efforts for the stores to fructify, but we typically will open anywhere between 6 to 10 stores a year of Sephora.
Now, your net debt as on the 31st of March was close to 400 crores, if I'm not mistaken. How much will you...
See, we don't disclose brand-wise number, but I can say that it's doing quite well, and the like-to-like growths are quite high, and we'll continue to expand and take this business forward.
Thanks so much for taking time out and joining in.